Welcome to another edition of The World According to Bob. Today we're going to talk about investing and some recommendations I got from the AI today. Being that all the stocks in mutual funds and everything out there seems to be tanking under Trump, I went in there and I said, well, what are some good things I can add to my current investments? So I uploaded all my investments portfolio to the AI and I said, what do you recommend if I had $100, what could I spend it on? And it spit me out several things that you may want to hear about. The first option was gold. And under Fidelity, you could buy that without needing to go to these third-party websites and buying physical gold. You can buy like an ETF, an exchange-traded fund. And all you got to do is put in there under the ticker symbol where you're going to buy a stock, just put in GLD and you can buy gold. But right now they're selling it for $279 per share. That's the current price. But the way things are going up and down, I don't want to buy it for $279 and then as soon as I buy it, it goes down to $275 or $265 or who knows. Everything seems to be going down right after everybody buys it. So I said, what if I just want to spend 25 bucks because that's all I can afford? And some people, that's all they can afford. They don't have $279 for one share of the gold ETF. So here's how to get $25 worth. And we're based on that rate, we're going to buy it at $270 per share instead of the asking price of $279. So what you do is you go into your Fidelity account, like your IRA most likely, and you go down to the box and you put GLD for the ticker symbol. And then you want to put how much you want. The action you're going to, well, first you're going to click is buy, and then you're going to put the quantity. Now, if you want to get $25 worth, you're going to put in 0.092 and make that a limit order. And the limit price is $270. And you're going to change that till good till cancel. And that's going to let you buy one share at $25 if the price ever drops. And because you're going to put time in force, good till canceled, it will stay there for 180 days. If the price never drops that low, then it will just return back the money that you pledged for it, and then you can bid on something else. So the next one it recommended, the AI I'm talking about, is bonds, and that's BND. And the current price that you get it for today is $73.82. And the AI is recommending a limit order of $72. So if it drops down to 72, you'll get one. But what if you don't have $72? You just want to say, here's $25. What can I get for 25 bucks? So you're going to go in there to get the $25 calculated, the share price. You take $72 and divide it by 25. And that comes out to 0.3472 shares, or it rounds up to 0.347 shares. So that will get you just under $25. So you go in there and you're either Fidelity or Charles Schwab or Vanguard, and you go to like you're going to purchase a stock and put BND, and then you're going to put click the buy button, and then for the quantity you're going to put 0.347, and where it says order type, it'll say market or limit. Click limit and put the limit price of 72. And then for time in force, put in good till cancel, GTC. And that will get you in at 72. And that will last for 180 days, or until it expires, or until you actually get it for that price. The next one the AI gave me on the recommended list was the Fidelity MSCI Consumer Staples Index ETF. And the ticker for that is FSTA. And today's price is $49.27 a share. And that ETF has over 104 companies in it, like a mutual fund. And some of the top 10 of these you probably heard of before: Costco, Procter & Gamble, Walmart, Coca-Cola, Philip Morris International, PepsiCo Inc., Altria Group, Mondelez International, Colgate Palmolive Company, Kimberly-Clark, and there's 90 more on the list. But these are your basic consumer staples people are going to buy every day, whether there's going to be a recession, no recession. people are still going to go to Costco and buy toilet paper and drinks and things they need. So this is something that's going to be safe to invest in during the downtime where all the tariffs are affecting everything. So let's suppose you want to get, you don't want to spend the $49 for the asking price, because then what if you get it and then it drops right after you buy it? So let's save a little bit and say we want to get $25 worth. We're going to do the same thing as the other two, as the gold and the bond. So we want to get it at $47 a share. That's what the AI is recommending it. And if it doesn't get it that, then in 6 months we'll get our money back and we'll invest in something else. So what you do is you go to your favorite investment platform, either Fidelity or Vanguard or Charles Schwab. So one of those you're going to get, and you're going to put in the ticker symbol FSTA. And then for the action again, you're going to click buy. Make sure you put the symbol FSTA, and then the quantity, we're going to put 0.531, and the limit is going to be 47. And that's going to be good till cancel. And that will get you $25 worth of FSTA. So once again, if you want to figure out how we got that calculation of $25, you take 25 and divide it by the asking price is 47. So that's going to be 0.531 shares. The next one we have here is one for real estate. And the ticker for that is the letter O, Realty Income Corp. And right now that is selling for $55.12 a share. But the AI is recommending it, trying to get it down to $52. So we want to do the same thing with that. We want to do a limit order on it. And for that, let me see. I have the notes here for that. O pays dividends, and they're really good. So the O is definitely, you want to get something in there. There's like, I think they have 13,000 different holdings for that you're going to get profits from that as far as dividends. If you want to do more research on it. But once again, we want to get that at $25 instead of paying the $55 asking price. And that's based at $52 that the AI is recommending. But we want to get $25 worth of that 52. So to calculate that, we're going to take our $25 and divide it by the asking price that we want to pay of 52. So that's going to give you 0.4807 shares, or round it up to 0.48. So you go back to your investment platform of choice. That's going to be Vanguard, Charles Schwab, or Fidelity. You're going to go on there and put in that ticker symbol of the letter O, just that one letter O, and then click on buy. Quantity, you're going to put 0.48. And then you're going to make that a limit order, not a market. And then the limit price, you're going to put 52. And for the time in force, put in good till cancel, GTC. And then let it sit there for 6 months. If you want to go for less, I think you can put a date in there and say maybe you only want to let it go for 90 days. And if 90 days it doesn't hit that target, then let's move on to something else. Just keep on trying to lowball all of these different things, because there's no sense of paying market price. As soon as you buy it, it goes in the red right after, because then the stock market drops another 1,200 points or 2,000 points in a day thanks to all these tariffs. But in the meantime, let's try to get some good deals. The last one it recommends is SPYI, and that is the top 500 high income ETFs of the market. That's the NEOS S&P 500. That's NEOS. And right now those are $43.59 a share, and the AI is recommending them to buy at $41 a share. And those are tech stocks, so a lot of those are going to be tanking right now, so we don't want to overpay for those. So we want to get $25 worth of $41, so that's going to be 0.6098 a share, or round it up to 0.609. So that's going to get us like $24. So what you're going to do is go in Fidelity, Schwab, or Vanguard, go in there and go buying from your account, whether it's your IRA or whatever account you have, for the symbol SPYI, and then quantity 0.609. The order type will be limit. The limit price will be $41. And then again, good till cancel. Let it ride for 6 months. It may drop even lower than that, but you don't want to overpay and pay market price, because we've been doing that for the last few weeks, And every time it drops, it keeps dropping. So everyone is saying on all the other videos, hey, I'm buying on the dip, but it keeps on dipping. Well, don't buy it at the asking price, because it's just going to drop right after you buy it. If it doesn't drop today, it may drop tomorrow or the next few days. Whatever more turbulent bad news comes out in the market, then the stuff all drops. So let's just not pay asking price. Let's all lowball all these things and do limit orders on everything from now on, because you get tired of losing money. You're not really losing it because it's unrealized losses. You're not going to lose anything until you sell. And for the accounts that I'm telling people to buy these things in, you're going to be putting it to a Roth IRA or something like, or a regular traditional IRA, something that's going to be tax advantaged. Where you have your Roth, you're going to pay 0 taxes on the gains. And in my case, I'm not going to be touching these things for like 10 years. They're going to be sitting there getting interest and dividend payments on them. It's going to get capital appreciation as it grows and gets older. So I don't mind, but at least I'll get dividend payments, and those dividends, I have set them to reinvest automatically. So whatever dividends I get, instead of getting cash out, it's just going to buy more of that same stock at a fraction. And that's what I'm recommending to people to do. The whole point of these videos that I keep making is there's so many people out there that are simply not investing a penny just because they're broke. And I understand where you're coming from, but that doesn't mean that you should just not invest. You still need to put money away for your future. Look at all these people that are in their late 60s or 70s and they didn't put any money away. And now they're broke because they didn't put any money away. So at least put something. Get a habit of putting at least $25 a week in, $15 a week, $100 a week, whatever you can afford. The ducks here are making tons of noise. These are Egyptian ducks. You guys are ruining my video. Do you mind here? Hey, hey, hey. Come on now. Shh, shh. Quiet, quiet. All right, they're not going to shut up. I guess they want me out of their territory, so I'm going to leave. Okay. Please like and subscribe my videos. Hopefully this video will help somebody out there who is new to investing and they don't know what to invest in or how to, and they have a very limited budget. So not everybody out there is rich and has $10,000 sitting in their checking and say, ooh, let me throw all that money at this. No, do limit buys on everything. Approach every investment like you're cheap, like you want a discount. You know, like when you go into a car dealer and it says $35,000 on the price tag, and then you go to the salesman, well, can you give it to me for $33,000? You're going to do the same thing with all these investments. Don't pay market price. Lowball them for maybe 4% less than the asking price, and then put that as your limit buy. And however long it takes to get there, it gets there. If it doesn't reach it, then it wasn't meant for you. Move on to the next investment. All right. Follow me for some more tips later. See ya.